Hello friends, welcome. Friends, in today's video, we are going to focus on one of the surveys, results of one of the surveys which was released by RBI day before yesterday. This is called Consumer Confidence Survey CCS November 2023. Now friend, on that day, 3 surveys were released and I have done a video on the inflation expectation survey of household yesterday, and I'm going to put a link in the description. Anybody who has not watched, they can watch that. Today I am planning to do a video on consumer confidence survey, the results of consumer confidence survey. Now friends, RBI has already published the results in a PDF document which is here in front of your screen. Now anybody who is interested in wanting to learn more about the survey can go and read this document. Now friends, I am not going to focus on this document in today's video. My plan is to look into the time series data which is here. If you look at there, my mouse is pointing here. Note, please see the Excel file for time series data. So what I have done is, I have taken out this time series data and it looks something like this. I'm going to show you how it looks. This is the time series data, and this time series data has got different tabs capturing different economic dimension. Like the T1 table is economic situation, T2 table is employment, T3 is price, T4 is inflation, like that. Then we had the non-essential spending. All the dimensions are captured for starting from 2015. Some are from 2015, some are from 2012, depending upon what kind of length of period the RBI has been involved in carrying out this surveys. Those details are captured here. So what this table does, it basically has got two different segments. One is current perspective and then 1 year ahead of expectation. So there are two different segments under which poll is conducted and people are asked for their views. So under the current perspective, both the segments, there are three different dimensions on which the responses are requested. One is that what the respondents view, whether there is an improvement which has happened from a current perspective as far as this particular economic dimension is concerned, whether it has remained same or it has worsened. Similarly, 1 year ahead of expectation, whether the economic conditions are going to improve, will it remain same or worsen. So this particular table is already there, but unfortunately this does not give you a better perspective to internalize the data and see the larger story. So what I have done is, I have captured this information in a Tableau dashboard, and this is a Tableau dashboard. I am going to blow this dashboard so that it covers the full screen so that you can see it better. So what you will see here is that, as usual, I have got time metric which I can zoom in as I need in quarter and yearly terms, and so that you can see the larger trend, not only the current trend but also what happened in future. And why it is important? Because it gives us a flavor of how the stakeholders in the economy is going to respond, what kind of actions that they are going to perform going forward. Because if they feel that the situation has improved, their contribution to the economy will be more motivated and it will be much more driven by the perception that what kind of flavor that they feel about that particular economic dimension. So that is why it is very important to understand, so that we get a feel as to how the others are going to respond to in the economy and what kind of contribution that they will have in the economy. So let's, without wasting any further time, let's look at this study, and let's look at this dashboard, and we will see all the dimensions one by one. So the first dimension is T1 economic situation, the first tab of the Excel sheet. Now in a month time scale, if you see, which is May 20 to November 23, it gives us an indication that the respondents, this is basically percentage. If you see 14.36 means 14.36% of respondents felt that a particular dimension, like here in this case it says it will improve. So this is the percentage of respondent, and all these three will add to 100%, right? If you add all these three, it will add to 100%. So from a current perspective, the trend shows that the perception of improvement is quite strong. So you see, it has been going up, and September 23 month, it was the highest, and people who felt that the situation is going to go worse, they were at the lowest level, and those who felt that the situation will remain same were at a certain level, which is 20%. Now, in this particular survey, which is November 23, the period between September to November 23, 33.11% of the respondents feel that the situation has improved, which is lower than what they felt on September 23rd, that is 2 months back. And what 22.51% feel that the situation has remained same, and 44.38% felt that the situation is likely to worsen, which is slightly higher than what we saw in the last cycle of the study. Now, 1 year ahead, the same flavor we can see here, right? If you see here, will improve means there has been a slightly damping factor from the respondent. They believe that yes, there is a rising trend about 1 year ahead, but there is a damping factor around 200 basis points, where 54.27% of the respondents feel that the situation will improve. Likely to remain same, it is 17.22%, and will worsen is slightly higher than what it was, what we saw in the earlier cycle of the study, but marginally. It is not a very big change. So this is a monthly view. If I do a quarterly view, you can see the trend. The improvement is basically starting from FY13 Q4. You see that the situation, there was a very positive flavor among the respondent till FY16, actually FY17, and thereafter there was a slight damping, and then it basically improved, and after the COVID hit, everything went down. Now it has started to pick up. So this is a very interesting trend that we see, that how the situation has changed. Similarly, if you look at the worsening dimension, you will find that the people who they believe that on Q2 FY21, they believe that 79.6% believe that the situation will worsen, but then slowly this trend has gone down. Now only 44.38% believe that the situation will worsen going forward. Now, if I take a yearly view, let's see what happens. Now, yearly trends are almost similar, because in the quarterly also we could see from FY13. So I think there is no need to look at yearly view. Quarterly view is sufficient. Now let's get back to a different dimension. Let's go to a different dimension, which is employment. Let's see how the view has changed of the various respondents. Now, from a employment perspective also, we see a similar trend. I don't think that there is much change in the trend. What we saw in case of economic situation, see, is almost similar. There is not much change. Okay, same. It is almost resonating what we saw in the economic situation as far as well. So nothing to talk much about this. Now let's look at the other dimension, which is prices. Let's see what they talk about prices. Now, from a pricing perspective, people basically feel that there is a downward trend. If you see, this is interesting. People are of the view that the prices are not going to improve. That is where there is a rising trend here. People feel that the pricing situation is going to become worsen, right? And the number of respondents and the percentage of responses who believe that the situation will remain same also has increased on a monthly basis. Whereas if we take a view for a larger time period, which is 1 year ahead, you will find that there is a slight increase of respondents which believe that the situation as far as pricing is going to improve 1 year ahead from now, right? Which is also very interesting. And the people who have responded, who feel that the situation will remain same, is slightly increased by around 30 basis point, not much, right? And then will worsen or decrease, which basically means that from a pricing perspective, there is a perception among the population that the situation will improve 1 year from now. which is very interesting. Though there was a drooping people who felt that the situation has improved, or slightly is going down, showing a downward trend. Now, if I do a quarterly time scale, what kind of situation that we see? We see that it's almost like flat, if you see, after COVID. Most of the people basically most of them feel that the pricing will improve, because at the time when the COVID had stuck, that time, the sentiments were bad, but now more or less it is a flat. But key takeaway from this particular chart is that there is a perception going forward that 1 year from now that the respondents feel that the pricing situation will improve. That is a key takeaway. Now let's look at inflation, and let's go to month first. Now, from an inflation perspective, the larger number of respondents basically believe that the situation as far as inflation is concerned is going to remain same or worsen. So it is quite contradictory. It is not contradictory, because in the current perspective, even let's look at the pricing dimension again. Let's look at pricing. Let's see. Yeah. So I think from a pricing perspective also, the people who felt that the situation has improved has slightly gone down. So therefore, the inflation part should also resonate with the same. So look, it's almost resonating, right? The price and inflation, response are almost resonating, right? And going forward, let's say after 1 year time frame, what we saw as far as pricing, people felt that the pricing situation will improve after 1 year from 1 year from now, and the inflation situation, what they are saying, they are also making a similar kind of prediction. See, almost similar, right? So we expected that these two dimensions should resonate with each other, and it is resonating, right? Now let's zoom out and do a quarter level and see what the respondents have been saying. Now, from a quarter level also, if you look at this, it's almost similar to what we saw in case of pricing. And it has to be, because both of them has to go hand in hand. Both pricing and inflation has to go hand in hand. See, again I'll just toggle between these two, and you can watch. See, it's almost resonating, right? There is not much change, which is what we had expected. Now let's look at the other dimension. Let's look at income. So how the income of so it is very interesting. This is interesting. So most of the people believe that the income perspective has improved, right? Which is very interesting. See, there's a rising trend here from an income perspective, and many people say 27.5% of the people are saying that the income situation has improved, and even a larger segment of the population is saying that the situation has remained same. Means there was a rising trend starting from September 21 till July 22, and then thereafter it kept on increasing. Now 50.07% of the population is saying that the situation has remained same, and the worst people who believe that the situation has worsened has also gone down, which is also very, very interesting, right, from an income perspective. And people believe that going forward it will improve. So look, it clearly demonstrates that the population who have been surveyed, they have a very positive perception about the economy as far as their income is concerned. Only concern that they have is that inflation is not getting contained and will not likely to get contained. But income is going to improve, which is a very interesting kind of outcome of this survey. Now let's look at the other dimension, spending. No, let me just do one thing. I forgot to do. I am allowed to zoom out and see what the situation as far as the income is concerned from the point of view of a larger time scale. So here you see that from FY 13 Q4, the income situation was on a downward path. See, it's all, so perception that the situation has improved was on downhill. And then from FY21 Q2, it has shown an uphill, which is very, very interesting. So I am myself getting very surprised by these findings. So it very clearly shows that from FY21 Q2, most of the populations believe that their income situation is going to increase. So this gives a very positive flavor for the economy, that economic situation is now improving. That's the perception, which might reflect in investments in the stock market and other kind of instruments that you will be involved in, and closely, very much you must be focusing on those kind of things very closely because of the interest that you might generate. See, worsening situation, it went up very high, which is very interesting. That FY 21 Q2, there a lot of respondents believed that the situation has worsened from an income point of view, and now the situation is becoming better what it was earlier. And forward looking perspective is also becoming better as far as income is concerned. Now let's look at the other dimension, spending, and we'll do a monthly time scale first. Now spending is roundabout going to remain same, right? It is not going to change from a future perspective as well as from the current perspective. Now if I do a zoom out and a quarter level time scale, let's see what the respondents are saying, which will be very interesting to see. Here also it resonates with what we saw as far as the income is concerned. So it's all, I think it is natural, right? The more your income, more you are going to spend, right? So as your income is going to increase, your spending is also going to increase. So there is nothing very surprising about it. Now there is one more thing, which is essential spending. So spending has been categorized into two different parts: essential spending and non-essential. So let's look at this again. Let me do a monthly time scale. So essential spending is going to increase, right? Has increased, and in future also it is going to increase, which is interesting, right? And let's look at non-essential, then we'll do a quarter level time scale. Non-essential spending is also showing a similar trend, right? And if I do a time scale on essential spending on quarter, let's see what the results basically tell us. Oh, this is a problem. Yeah. Sometimes, this whole Tableau dashboard dealing with so much data, it kind of gets slow. So, from a quarter perspective, you see that essential spending is going to rise. So it has remained. Most of the respondents are basically saying the essential spending has increased, and going forward also it is going to increase in future, right? And the non-essential spending, if I do a quarter level time scale, is also showing a similar trend, right? So friends, this in nutshell what I wanted to basically I myself get interested with a lot of data, because when data is there, it tells a story which you can't get from a short time perspective. For me, unless you look at the longer trend, you really don't understand what is going on in the economy and how people are changing their behavior and what kind of future perspective that you will encounter going forward in the economy. So for me, it is very important to look at the larger perspective, and the reports that are typically out in the public domain, they give a very shorter perspective that does not tell the story, and that is why I take the effort to aggregate this data and put it in the dashboard. And I hope that you found this useful, and let me know that if any other dimension that you want me to cover, I will definitely get involved with that, and I'll try to do a video. And as usual, thanks for your patient listening. I'll come back to you with the next video next time. Thank you very much.